You look great.
Everyone, I want to thank you all for letting me come out here today and give, thank you as well. I'm going to need the slides, that's good. I want to go ahead and first off say thank you to all of you for giving me the opportunity to speak here. I love coming to speaking events like this and talking about something that inspires me in regards to this space of cryptocurrencies, which I'm constantly keeping up with. For those of you who don't know me, my name is Nicholas Merton. I'm the founder of DataDash, the #1 largest YouTube cryptocurrency channel. I spend a lot of time, and I have for the past few months, going over for almost a year now, talking about fundamental investing as well as technical analysis for traders and the fundamentals of blockchain technology. But the big thing I really try to focus on more than anything is really a lot of the innovation that's going on in the space for cryptocurrencies and blockchain. It's such a fast-moving space, and whereas I think for the past 3 to 4 months, I think we all understand the narrative that has been pushed, the media narrative of how cryptocurrencies and blockchain are done for. I think we've been feeling this since December. It's understandable that in markets, when you have periods of exuberance, as I like to talk about on the channel, where markets get irrational, where valuations shoot up to unheard of valuations, we start to see prices correct. Reality kicks in, and of course, the headlines follow. But the big narrative I'm going to be pushing here today is that the narrative is much further from the reality than I think many people understand, and I can speak for this because I spend pretty much 24/7 researching cryptocurrencies and blockchain technology and the innovation in the space. So today I want to talk about what I think is a war brewing in the cryptocurrency space. Oh wait, no, sorry, wrong war. There we go. Today, I want to spend some time to talk about something I like to call the protocol wars. Now, protocols are a term that is interchangeable with the term enterprise platforms. I think many people have been hearing of players such as NEO being China's Ethereum, or some type of different platform that allows you to do two things, either utilize smart contracts or build decentralized applications without a central authority, as becoming an Ethereum killer. These applications or these platforms are going to be utilized by enterprise companies in a variety of different use cases for blockchain technology and smart contracts. And we're in a period when we're really trying to see the issues that still get in the way of enterprise adopting blockchain technology, getting fixed, solved, and completely removed so we can see the full potential of these applications in the corporate world. But as you can obviously see from the picture, it's not so much of a pretty clean picture where we have 3 to 4 competitors. We have an entire range of different protocol or enterprise platforms that are aiming to do objectively similar objectives, but at the same time have different philosophies, different features, different levels of scalability, and features that are required for different businesses to meet certain tasks. So I'm going to go ahead and spend some time real quick to talk a little bit about the evolution of blockchain technology, because I think it's understandable that we didn't get here to where we are overnight, and where are we looking forward to is the real question when we're thinking about investing in blockchain technology. So first and foremost, we obviously had Bitcoin. Bitcoin's protocol allowed for a very simple feature, but a very revolutionary one. The idea that you can send peer-to-peer transactions between two partners in a trustless, decentralized manner, where no third party would be involved in the transaction, and you could have clear trust in the network that that transaction would not only be processed, it could be processed and historically tracked on a public distributed ledger. So, a very revolutionary piece of technology, and I think for the best application, which is money. But we learned with the creation of Ethereum that this was not the limit of potential in regards to blockchain technology. We started to realize very quickly with a variety of open source projects the utilization of building decentralized applications on blockchains. Being able to build applications that are not only peer-to-peer, but have no central authority. You could easily, for example, make a ride-sharing app where, in the case of Uber, which seems peer-to-peer between a driver and a rider, you could actually have something that doesn't have Uber, the middleman, taking a cut, increasing profits for both as well as cutting costs. So, again, decentralized applications have a wide range of applications for blockchain technology and removing central authority. But along with that as well, we could utilize smart contracts. This is important as well because there's a lot of use cases for industries to automate processes as well as come to agreements and utilize it as escrow. But Many people have been asking me over the past few months, looking for a sense of hope, what could be this third wave of blockchains. We've been hearing about third generation blockchain technology and all these new upcoming projects in the space, and many people have been trying to get a solidified picture as to what this really means. So cutting out all of the buzzwords, cutting out all of the labels, I want to go ahead and visualize, in a sense, what this next generation of blockchain technology really looks like. Because as someone who is continuously doing research, going past the headlines, I can tell you all, it's extremely exciting. It's not a simple addition of a feature to blockchain technology. This isn't one single step, and this isn't something that is simply going to be ignored as a minor upgrade. Now, we're coming across to a very revolutionary time in blockchain technology where the gaps that have gotten in the way of enterprise adopting blockchain for business use case is starting to evaporate. We're starting to see legitimacy come to the technology, and whereas we lived in an era where Ethereum itself was a guaranteed leader in the space of enterprise adoption of blockchain, we're finally entering into a region where competitors are starting to show the loopholes and flaws that currently linger within Ethereum's community. Not to say that it can't evolve, but at least problems that are currently relevant to business adoption. So the first one I want to talk about is scalability. I think we understand that this is a serious issue. It doesn't just plague Ethereum, it plagues pretty much all cryptocurrencies, including our famed and beloved Bitcoin. With Bitcoin processing single-digit transactions between 3 to 5 a second and Ethereum only processing barely double-digit transactions, we can obviously understand that enterprise cannot build applications on top of this technology at this current moment. And even though there are proposals, I think it is obviously clear that at the moment, every single company that works with the Ethereum Foundation and the development were very eager to see scalability come up when they saw that a simple game of CryptoKitties was clogging up an entire enterprise protocol. I know I would be a little nervous myself. Along with that as well, we have to talk about sustainability. This is one thing that I think so many people don't think of in regards to blockchain technology and the idea that we're building an ecosystem with these protocols. If thousands, even if hundreds of applications are being built on top of these protocols, whether it be Ethereum or another competitor, we need to make sure that sustainability is a model. This includes two things. One, both a treasury system where after an ICO, let's say, for example, you need to continue development or marketing, how are we going to get capital for this? How are we going to continue meeting the needs that we want on the network? Well, in that case, we need to build some sort of treasury model or something that can continue funding into the ecosystem. And this also leads towards another thing as well, which is governance. Now, I really want to drill this in before we focus in on the other points, because governance itself is going to be the dictating model as to whether or not we can potentially see a player replace Ethereum. Over the past few years, we've seen Bitcoin's governance system of the miners deciding the direction of its protocol and the decisions behind that protocol can be quite stagnant and can actually, in fact, divide the community through hard forks. We saw this with the creation of Bitcoin Cash, where the block size was increased from 1 megabyte to 8 megabytes, and Bitcoin continued to adopt SegWit, or segregated witness. So we have a divided community on Bitcoin. And with Ethereum as well, we're not seeing developments come fast enough. Many people also worry as well in regards to the DAO hack, where over 150 million Ethereum was stolen. We have in this case Vitalik Buterin and a very select few at the Ethereum team deciding to roll back the chain. Now on paper it sounds nice, but it goes against what blockchain stands for, and that's the immutability of transactions on the ledger. So we can see that both Bitcoin and Ethereum, multi-billion-dollar cryptocurrencies and their underlying protocols, don't have a system of governance. This is what's going to change in regards to third-generation blockchains. In my mind, it's what is a pinnacle of defining what a third-generation blockchain is. So we can easily not only add the features we've listed, but the ones we're going to continue talking about later on throughout the presentation. Along with that as well as interoperability, being able to communicate with cross-blockchain communication, extracting information as well as importing information from other blockchains, and really making use case of the connectivity that separate blockchains that offer different features can provide to one another. ABFT secure. This is a very long and fancy term. It stands for asynchronous Byzantine fault tolerance, basically meaning absolute consensus. One thing that many people don't know about Bitcoin and other current blockchains that use even the proof of work mechanism is that we don't have absolute guarantee in proof. We are very, very close to having absolute consensus, but it is not truly absolute consensus. ABFT is becoming a reality with many projects that are third-generation blockchains, to where we know that when a transaction is processed on the network, we have absolute trust in that system. It is truly trustless. Privacy features as well. This is pretty self-explanatory. It doesn't require too much detail. We understand that some businesses probably don't want some of their transactions on a public ledger. So in that case, I think it's very understandable that this is also going to be a feature. And we've seen some developments and adaptations of privacy features such as ZK snarks on these protocols. Ease of use is probably another one as well that I think many people don't really try to push. We are still in an era where if I want to develop on top of Ethereum, I need to be a Solidity developer, or I need to go out and pay what would be the equivalent of around 250,000 US dollars to hire a Solidity developer to work for me. They're in that high of demand right now, and this is holding back enterprise from actually being able to utilize blockchain technology. Along with it as well as digital asset management. Another unique feature as well, being able to store things on a certain protocol, ownership of entitlements as well as different types of assets. And last but not least, innovation and consensus algorithms. This again goes back to the importance of what really makes blockchain what it is. Distributed ledger technology, or blockchain, is an exciting technology, but it's only useful when you have a system of consensus between users on the network that can be trusted, meaning that it is trustless. You know that whoever you're working with on the network, so long as they're playing by the protocol's rules, that you have absolute consensus on transactions, or at least close to absolute consensus and a lack of trust. So, let's go ahead and take a look at a few of these, because we're not going to be able to look at every single one of these features here. I want to talk about the big topic of scalability. Now, scalability is defined by a variety of things, but what we're going to really see here is more of the visual side of scalability, which is transactions per second. If we take a look across the board at different protocols, and again, keep in mind, most of these are being operated on testnet, and they are early stage, so we have to see what it'll look like on mainnet. But at this moment, there is a lot of exciting results across the board here. And this chart really, I think, does a center of justice in regard to the topic of scalability. Now, as you'll tell, this isn't a linear chart. This is a logarithmic chart, meaning that we're seeing some players, whereas Ethereum and Bitcoin are stagnant at about single-digit or double-digit transactions per second, that many protocols are moving to hundreds of transactions, thousands of transactions, tens to hundreds of thousands of transactions, as well as new platforms like Hedera Hashgraph, which are preaching numbers between 500,000 to 1 million transactions a second. So we can obviously see, no matter where we're moving or what protocol is going to win this war, that there are many protocols preaching much higher levels at the current moment through current tests. And this is being done through a lot of interesting technologies, things like sharding, things like sidechains, for example, and other methods of horizontal scaling where we get more users on the network and more nodes running to where we can operate more transactions in any given second. Along with this as well, again, going back to the importance, consensus algorithms. If we take a look at legacy systems like Bitcoin, we understand the security and the history and legacy behind Bitcoin's proof of work, SHA-256. This system is, in many cases, very, very secure, but at the same time, many people have the question as to whether or not we can operate thousands of blockchains under a proof of work mechanism serving different purposes. And this led to, obviously, a few different types of reiterations of consensus. Proof of stake, for example. Proof of stake being the fact that in this system, we all have a stake in the voting process. So if you hold higher weight of stake in regards to holding a larger amount of the currency, you have a larger mining capacity or odds of being able to be a miner for the next block. Along with that as well, you have delegated proof of stake. So EOS, for example, one of the many other competing protocols, one many people call the Ethereum killer, is looking to do delegated proof of stake. And this is going to work through a system where, unlike proof of stake, where you're having an opportunity at random to serve at mining the next block, delegated proof of stake puts up and delegates certain voters on the network, people who hold a large stake in regards to EOS in the currency in this network, where they are able to vote as delegates, and they have a financial incentive to do so, much like in proof of stake. Because if you have a large financial stake in the network, your job is to help in making sure that it operates smoothly. For if it doesn't, you could possibly see your stake be worth less. Along with that as well as proof of authority. So this is a recent protocol that had launched as of recent, just had its ICO and successfully launched on Binance. Proof of authority is aiming to give a system where on private chains off the main protocol, you could delegate votership to certain individuals, trusted individuals with identification. So it's a very fascinating system to look through and see how the structure of POA network works. Along with it as well is proof of weight. And this is something that I've gathered a little bit of interest for. As we were talking about with delegated proof of stake, where you have a stake in the network, you have something to defend of some sort because you want to make sure that you have some liability to serve the network's benefit rather than its negative. With proof of weight, there's an interesting mechanism. Let's say, for example, we take Filecoin or one of the many other cloud storage platforms that are out there. Well, in a proof of weight system, we could, for example, on a cloud storage platform, make it so that for every amount of bit of information that you put onto this blockchain that you're storing, let's say I'm storing terabytes upon terabytes of information on this network, that I have a stake in regards to the network and making sure that it's secure, so I get delegation of voting. And there's all types of ways you can use proof of weight. This is just one simple example. And last but not least, stepping a little bit out of consensus algorithms, but also playing a role in regards to consensus algorithms, is directed acyclic graphs, which are known as DAGs for short. We've seen many different projects come across the board. We've heard about IOTA using the Tangle framework, as well as new currencies such as NANO that use a block lattice, and also entirely new systems like Hedera Hashgraph, which are proving higher levels of transactions. So we're obviously seeing a growth in not only consensus methods, but along with that, a combination of utilizing entirely new infrastructures outside of the base blockchain that we see with Bitcoin and Ethereum. Ease of use as well is also important. As we were talking about earlier, I really look for systems that are going to make it easy for enterprise platforms to adopt blockchain technology, because right now there are many gateways that are blocking off people from actually being able to get the benefits of smart contracts and building decentralized applications. Nulls, for example, is a protocol that's coming out, and a big push from Nulls is the fact that they're making a modular-based blockchain that will allow people to easily build enterprise applications on the network. So I think we need to have a push for this, especially seeing as in regards to these more coined protocols that are public and open source for anyone to use and not a private blockchain. I think we need to make sure that they're easy for small to medium enterprise to onboard onto who may not be able to hire high-end developers. And that also leads me to a project that I recently partnered with known as Unibright. Unibright gives people a gateway who are starting off in a small basis to onboard in regards to blockchain technology through smart contracts. So a few of these roadblocks might be the fact that you can't hire a Solidity developer. Well, no worry, on Unibright they allow you to do a workflow design in regards to making a smart contract. And it's also blockchain agnostic. Let's say, for example, that you thought Ethereum was going to be your platform, or Neo, for example, and 3 months later you need to switch over to another protocol. Well, then you're going to have to get another developer who can program in the separate language. So because of that, this framework of Unibright and other different platforms is really giving us an opportunity to be able to onboard the process and simplify blockchain adoption for corporate enterprise. And then we also have the topic of interoperability as well. So we have many programs such as Quant Overledger, Interledger, and Hyperledger working together to build protocols to connect blockchains together, which is extremely exciting so we can see the full use case of our business applications as well as smart contracts. So we've been talking a lot about all the innovation going on here. It's obvious that the fundamentals, at least in my perspective, are looking very, very exciting at this moment. But markets over the past few months haven't really reflected the past few months of innovation, all of the new projects that are currently in the works. And I think this is really a possible opportunity to see some serious upside. Because I know that many people are tendent to think with emotion in these markets, especially in markets as volatile as cryptocurrencies. And because of that, I try to keep people rational on the idea that the narrative is far from the fundamentals. So when crypto markets are down like this, when markets are emotional and people have given up on the innovation and are caught too much in the headlines, I would say to look towards the fundamentals, to look at the fact that here in 2018 and going into 2019 as well, we are setting up for one of the highest levels of corporate adoption of blockchain technology. What we had thought about and dreamt about with Ethereum is going to become a reality. And whether or not Ethereum becomes the platform of choice, or if we have a variety of new players come into the space, it is going to be a beautiful period for market adoption and also a beautiful market cycle where optimism and risk-taking comes into play. So my main point is to focus on the fact that we have an opportunity at stake, a $500 billion discount in valuations of crypto markets. And that's a lot to make up for with all this exciting innovation. So the question is, what will you do? Will you take the negative case and continue to follow the headline narratives that tend to be historically wrong in regards to Bitcoin or blockchain? Or are we going to focus on the fundamentals and think rationally and look towards the optimistic future we all know blockchain can achieve? Thank you.
Awesome. Give it up for Data Dash. One question.
Oh, one question?
Let's do 2 questions.
Hey, Nick. So in Singapore at BEF, I couldn't help but hear at all the private tables, like when we were having lunch and the parties, and everybody kept talking about DAGs. And you mentioned it. And I'm curious as to what your thoughts are on DAGs and if you think they are the future like so many people that I've talked to think.
Well, I've been really excited about DAG technology over the past few months as I first really kind of got open to it. I'd heard about it through IOTA and many other players who were experimenting with it. But the first one that really caught my eye was not so much of a protocol. It was NANO, for example, because I'm originally more interested in peer-to-peer digital cash. And when they were able to provide a system comparative to, let's say, Bitcoin, for example, which had $40 fees back in December at the peak of cryptocurrency adoption, when we looked at players like NANO, I was able to process a transaction for the first time in my life, a digital cryptocurrency transaction between another party in a peer-to-peer fashion, incurring no fees and practically instant confirmation within about 2 to 3 seconds. And it was so funny going back and forth, being able to send that same currency back and forth within a fraction of a few seconds between another party and not incur any fees and sending back the same currency. So to me, I think DAG technology is already proving that it has the opportunity to not only be a secure solution, but also a much more effective one. The thing I want to make sure, though, is that it shows consistency. Because many DAG technologies have been preaching high transaction output, but in many cases, that transaction output can fluctuate. I think we need a sense of stability, or at least that the range in which this DAG technology can at least perform, in a sense, for a peer-to-peer digital currency or for a protocol, is enough to where it's not going to compromise the applications on top of it or the underlying currency demand for transactions. I don't think I'd have enough time to explain what a DAG is. It's a little bit complicated, but there's no one singular DAG. You have different DAGs, for example, as I was talking about with IOTA, where basically, in very simple terms, in order to get your transaction confirmed, you need to provide a proof of work of confirming 2 other separate transactions on the network. And in the case of NANO, for example, you have the block lattice. And this whole structure is basically a use case of sender and receiver blocks in regards to transactions. So it's a fascinating system, and the combination that they use on NANO with the block lattice and also delegated proof of stake makes it so that you cannot double spend on the currency, completely eliminating the fear that we still have with Bitcoin in regards to a 51% attack and other technologies. But again, still needs more experimenting. It's still an earlier technology, and I am skeptical as much as I am optimistic on DAG technology. Directed acyclic graph. Directed acyclic graph. It's a very technical term.
All right, any more questions, guys? One more.
Hi, Nick. Is it okay? Mm-hmm. Cool. Nick, my name is Busha. I just want to ask you the question that what do you see in the correlation with the regulation in terms of blockchain technology? What do you think is coming, or what do you think is going to be a positive impact for the whole community? Thank you.
Definitely. I love talking about regulation because it's been something I always think of game theory aspects, because I've always been skeptical more than anyone, and it's the reason why I got into blockchain technology, of what governments and banks are going to do. I will say that the driving force in this decision process, though, because I think banks have quite an influence on government policy, especially in the world of finance, which is what we're dealing with in regards to cryptocurrency, is that banks are in a catch-22. They can either do one of 2 things. They can try to, A, regulate a market that cannot be shut down so long as the internet lives. And again, as we were talking about earlier, if the internet shuts down, there are satellites that work in regards to the Bitcoin network. So you've pretty much proven you have a technology, much like torrenting and other technologies, that cannot be shut down. And you can try to regulate that as much as you can, and people will continue to innovate. At least that's what we've seen historically. And you also have the other case as well, where financial markets right now, and the US stock market and other indices, are rising towards all-time highs, And many people know that we're about to enter into another cycle towards the downside, which is going to cut out trading revenues, is going to cut out optimism in those traditional markets. That money needs to flow somewhere, and people want another area to put it. I feel that you're going to see regulation, much like we've seen in regards to the SEC, take a more positive tone. The reason I believe that is because that money needs to go somewhere. I think many people on the institutional side of finance who understand more than anything how money works are realizing just how much the underlying flaws of money are starting to show. We've had 0% interest rates over the past few years. We've had quantitative easing over and over again. And I think we're entering into a cycle where we're really going to start seeing the ramifications of that decision-making process for worldwide currencies. It's not just the dollar, it's across the board. So in regards to regulation, I'll give you a hint to it to summarize this before I continue rambling on about it. A good sample of this in regards to what we should look forward to is the SEC coming out when Bitcoin dropped from 20,000 down to 6,000. And when the SEC, one of the chairmen came out of the SEC, and he stated that we have to be respectful of this generation's right to cryptocurrencies and blockchain technology. It's very ironic that he did that after Bitcoin had dropped 70%. But I think the reason for that is because he's taking upon the opportunity of realizing that financial markets are going to have to move forward. And the SEC's recent decision to go about opening up the books again, which it had closed on a Bitcoin ETF, are starting to come back open again. And we're going to see, I believe, this year, again, I might be crazy on this, that not only are we going to see a Bitcoin ETF proposal passed and approved by the SEC, but if that is the case, if we do see a Bitcoin ETF this year, which I think is one of the big catalysts outside of the protocol wars that I've been discussing, you're going to see Bitcoin around $40,000 to $50,000, in my opinion, because we have not seen institutional money. We started off with retail investors and went towards institutions as we're going into the future. The opposite of the dot-com era, where institutions got in and then retail investors. And the institutions have the money.